Hello, folks. Most people think that Tesla stock price moves because of car sales, current earnings, standard financial metrics. This is nonsense. Today, I'm going to show how you can use the psychology of human misjudgment in order to understand the incredibly large investment opportunity that is sitting in front of Tesla and how you can profit from this in a very, very big way. All right. First of all, Um, many of the ideas that I'm going to be sharing in this video come from the investing family of thought from Warren Buffett and uh, his uh, a person that you might even be able to call a mentor of his by the name of Charlie Munger. Okay. And although Warren Buffett is best known as the super successful long-term value type of investor, what many people don't know is that his investing philosophy and style was dramatically informed and enhanced by his partnership with Charlie Munger, who served as the vice chairman of Berkshire Hathaway for about 40 years. Okay, so um, first of all, it's important to keep in mind that stock prices are set by the marginal buyers and sellers in the stock market. Okay, so the vast majority of people that buy into stocks, they tend to hold these stocks for long periods of time. And on the margin, we have a very small subset of investors that are involved in buying and selling the stock on a hour by hour, minute by minute, second by second basis. And it's these marginal buyers and the psychology of the marginal buyers and the marginal sellers that determines the stock price movements on a minute by minute, second by second basis. Okay. We're talking about a phenomenon that is completely geared towards humans. And so, in order to really understand what drives stock prices and creates this particular investment opportunity, we need to unpack the psychology of how humans think. Okay. And if you're interested in these ideas, there's a couple books that these ideas have been um, distilled from. One is Poor Charlie's Almanac, okay, and another one is a book that I've actually read about 10 times. This is Roger Lowenstein's Buffett, The Making of an American Capitalist. And also, I would suggest that if you really want to tune up your investing game, go back and reread all of the Berkshire Hathaway annual reports over the past 30 years, 20 years or so. Um, Especially the chairman's letter, which is at the very beginning of these reports. And you can find these at berkshirehathaway.com. And there is a lot of really important investing ideas that Buffett, in a sense, shared with us investors, because I really think he had an altruistic type of mentality about giving back and sharing what he knows about investing through these chairman letters. All right. So, first of all, humans are genetically programmed over the past 2 million years or so of evolution to have emotions that are completely separate from what is actual rational decision making. Okay. Fear and greed are driving the stock prices of stocks on a daily basis. All right. So let's look at just a couple examples of how fear and greed has been driving the stock price on Tesla over the past 12 months. Okay. So in this chart over here, we have the yellow line is the S&P 500 index, and the green represents the stock price on Tesla. And you can see that back in April, and as we headed into April, there was a huge collapse in the stock price on Tesla. And a lot of this had to do with the fact that Elon Musk was redirecting his energies and efforts and time towards the Department of Government Efficiency project in Washington. And this created fear that this was going to divert Elon Musk's time and energy from Tesla and be a distraction, and that it was going to create brand damage to the Tesla brand. And you can see this massive, massive collapse. It almost, dropped in half over this time period. That combined with the general market fear involving the new tariffs that were announced by Treasury Secretary Scott Bessent, huge collapse. Now, notice that as we go forward, it was in late June that the robo-taxi network was released in Austin, Texas. And as I mentioned in my earlier video on Tesla, we have this trend of improvement in their autonomous driving software called FSD, which is really the thing that is driving the intrinsic value of the company right now. So this was released, and that it tended to kind of like the announcement of this tended to stabilize the stock price. The S&P began to kind of climb out of that scare from the tariffs. But then Tesla full self-driving version 14 was released, and it was seen that it was a huge improvement over version 13. And for all practical purposes, videos began to surface online that pretty much confirm that Tesla has solved the full self-driving technology challenge. Okay. We get this little dip when Michael Burry, the famed short seller, made the announcement that he felt that AI companies were in a bubble. Okay, and this, also tended to impact Tesla. Tesla obviously is seen as an AI related business, but the overpowering sense that is just beginning to get released out into the psychology of the investment community is that this Tesla has solved the full self-driving problem, and this is going to be driving huge revenue and earnings going forward. All right, so psychological tendency or bias number one that we're going to go over, and this is Charlie Munger's framework for understanding what causes humans to make these kinds of mistakes. And one is what he calls inconsistency avoidance tendency. Sometimes this will also be referred to as first conclusion bias that humans have. And it stems from the fact that the human brain evolved to make quick survival decisions, and it created this anti-change type of mode in the minds of humans. And this tendency of psychological bias that humans have has been noticed by the famed economist John Maynard Keynes, the father of macroeconomics, who said that new ideas were not accepted because they were inconsistent with the old ideas that are in place. Okay, so once people get an idea in their head, they tend to stick to it, and it's very difficult for people to change their minds. This was also noticed by the physicist Max Planck. Planck, known for the Planck constant, who said new ideas are seldom accepted by the old guard. And this was very, very much true when Einstein presented a completely new paradigm for physics, which was his relativity. And the relativity paper was published in 1905. And there were the vast majority of physicists were not on board with this idea of relativistic physics, of like time dilation and length contraction and stuff like that. And it really took all the way until the atomic bomb was dropped in 1945 until this E is equal to mc squared type of relativistic understanding of nature was accepted. Okay, so almost 40 years. Wall Street pros think Tesla is a car company. Okay, they have been in that mindset, and it's very difficult for many of the Wall Street professionals to change off of that line of thinking. Um, and part of what reinforces that thinking in the Wall Street pros' minds is that the earlier versions of full self-driving, 8, 9, 10, 11, that were 3, 2, 4, even last year, it wasn't a fully autonomous driving situation, okay? And this cemented in their brain this idea that the human would always have to be involved in the driving process. So there's a huge time lag. It's probably going to take a year or more until the Wall Street pros eventually will move off of this first conclusion type bias and and accept the fact that we have a completely massive and new revenue model for this software type of as a service business model for Tesla. All right. One other data point that is interesting to note is that they recently pulled the safety. They weren't really safety drivers. They were safety monitors that were sitting in the passenger seat of the Tesla robo-taxis in Austin. And so these people recently have been pulled out. So now people are posting videos of these robo-taxis driving around Austin, and there's no safety monitor anymore. All right. Number two, humans, for some, they are susceptible to the problem of social proof uh, uh, errors in judgment. Okay. And Munger describes social proof as an automatic tendency to think and act as he sees others around him thinking and acting. Okay. Now, another name for this is herd mentality. Okay. Humans tend to look around at what other humans are doing and they tend to go along with the herd. And you could call this monkey see, monkey do type of mentality. And so how this is showing up with Tesla is that the internal combustion engine legacy vehicle manufacturing companies, they do a lot of advertising. They spend billions and billions of years on advertising their products. So if people see all these ads for internal combustion engine vehicles, they think, okay, that's the way people, the technology that people are going to accept for driving. Tesla doesn't do any advertising. Okay. So it's going to be a while until people get off of this mental model that they have had for the past 100 years about the internal combustion engine being the best way for human propulsion for transportation. A lot of people, they look around in their neighborhood and they see people driving internal combustion engine vehicles. Okay. So if they're doing it and it's like, I'm going to do that. And so they go along with the herd in that respect. Um, Social media influences this. I mean, there are people that have posted stuff on social media saying that basically, Tesla is a scam, that Elon Musk is a scam artist or something, and that he just inherited his wealth. So his $300 billion dollars is just somehow you just inherited it or something, which is like crazy. But I've actually seen these types of posts come into my Facebook feed from friends and family that I'm connected to on Facebook. Um, and then, so these types of messages, this type of social proof phenomenon creates what analysts sometimes call fear, uncertainty, or doubt in the minds of investors. And this affects the marginal buyers that are on the edge of, in terms of like that are setting the market prices of buying and selling. All right, number three, authority misinfluence tendency. Human society is formally organized into dominance hierarchies, with culture augmenting the natural follow the leader tendency of man. Okay, so if you go back to evolutionary biology, people living in tribes, there's the head of the tribe or the social unit, and people would fall in line and follow the leader. Okay, you can see how impactful this psychological misjudgment is if you read up on something called the Milgram experiment, where an authority figure was put in a room and was basically giving permission for subjects to, push a button that would give another person what they thought was an electrical shock. It was an actor that was pretending that they were being shocked. But it explains this Milgram experiment really was a follow-up to what happened in Nazi Germany during leading up to World War II, and explains how so many people in Germany basically just fell in line into all the terrible stuff that they did. This authority misinfluence tendency shows up in something that many people refer to as the inverse Kramer rule. Jim Cramer, longtime NBC host of the show Mad Money. Lots of people follow Jim Cramer, and so many people follow what Jim Cramer has to say with his TV show that over time, it's been noticed that if you actually did the opposite of what Jim Cramer suggests, you would actually do much better than following Jim Cramer. Because if you follow Jim Cramer, then for all practical purposes, you're just following the herd and you're going to underperform the market. Another example, all right, and this is not political, okay? I'm just saying this is the fact, is that President Joe Biden in 2021 said that in the auto industry, Detroit is leading the world in electric vehicles. You electrified the entire automobile industry. I'm serious. You led, and it matters. And this was said at a GM factory event in November of 2021. And I remember when this hit the news, my mind was just like exploding. I wasn't a Tesla investor back then, but I was just like, that is just so crazy, because this chart shows the actual electric vehicle sales in 2021. And there's about a Tesla alone was selling like 20 times as many electric vehicles as GM was. And in fact, they actually discontinued the one electric vehicle that they were selling during that year called the Chevy Bolt. So yeah, that's just as a fact. So imagine what this effect would have on the investing public that believed in what the President of the United States, this ultimate authority figure, was saying about um, who is leading, and what technology was the best to invest in terms of what company would be the best investment to be in. So there's another one, reward punishment super response tendency. Okay, which has to do with so this is number four, how important incentives and disincentives are in changing cognition and behavior. Incentives are a superpower, and how people are incentivized has huge implications for their behavior and how they think. And this has been encapsulated in Warren Buffett's in several of his investor chairman letters, where he says, he's quoted as saying, "Whose bread I eat, whose song I sing." All right. So this shows up in a very big way because companies like GM and Ford and Stellantis, et cetera, Toyota, they do a lot of advertising on television, okay? And lots of advertising in general, 6 billion about a year. Tesla doesn't advertise, and it tends to show up a little bit in a media bias against Tesla in the mainstream media. I mean, TV programs like CNBC are kind of like putting anti-Tesla analysts up quite often, and they have these irrational type of arguments about why Tesla is overvalued. Bloomberg is really biased against Tesla. Um, and if you think about it, it makes a lot of sense that if they're receiving a lot of advertising revenue from advertising GM and Ford cars, that this is going to color their perception about what the investment opportunity would be with a company that basically is not providing any revenue or income to them. And in fact, in a way, they look at uh, the Elon Musk ecosystem as being a existential threat because Elon Musk's economic ecosystem includes what used to be called Twitter, okay? And a lot of people have moved off of uh, old legacy media and are now getting their media from the renamed X type of social media product. Yeah, social media is draining the mainstream media, so they're very biased against Tesla. All right. So other phenomenon, psychological misjudgments are envy, jealousy, tendency. There are people that would never invest in Tesla because they think that, well, they're Elon Musk has got too much money already. Okay, they're jealous of his success. I know it sounds crazy, but there are a lot of people that just like absolutely hate the fact that Elon has been so economically successful. Related to that is dislike hating tendency. Um, I mean, Elon Musk, going into politics, he voted for Joe Biden, all right, when Joe Biden ran for president. And then it's like, didn't agree with a lot of the economic policies. And so kind of like tipped things in favor of Donald Trump's campaign in the most recent election. And there's a lot of people that just hate Elon Musk and hate anything that's associated with Elon Musk, including Tesla, because of this political dynamic and all of the fallout from the Department of Government efficiency efforts. Now, the 25th source of psychological misjudgment by Charlie Munger is what he calls the Lollapalooza tendency, which is the fact that you get extreme misjudgments or extreme cognitive errors amongst people if you have a confluence of multiple psychological misjudgments overlapping each other. And this is what I think is happening right now with Tesla. I think that if you add up and combine all of the elements that I just got done going over, it has created this real cloud over the truth about what's actually happening with this business. And I would expect that the stock price on Tesla will increase by probably on average about 40% per year over the next 5 years. It's just way undervalued compared to what I see is the current intrinsic value. Okay. And so here's a little follow-up on how Tesla and the other companies that I have made videos on and how they've performed compared to the S&P 500 since the videos were released. And I put all this stuff in a spreadsheet and calculated the difference between how the S&P has done and how the individual company has done. And you can see that, like Next Tracker is down since the video was released, but these other companies, um, with the exception of Nvidia, which is down just a smidge compared to the S&P 500, are up. And you can see that Tesla is actually up 17% since I released the Tesla video. Palantir is up 15%. And if you take the average of the S&P gain over this, it's about on average about 5 weeks, 6 weeks. The S&P 500 is up about 0.84%, and if you consider this to be a portfolio, of top of funnel portfolios about 4.9%, almost 5% increase. And I always like to annualize the numbers when I look at them. And so if you were to extrapolate this return over a 1 year period, it would result in the S&P has been gaining at a rate of about 8.4%, whereas this top of funnel portfolio has been increasing by about 49%. Um, this is not a guarantee that it's going to be exactly, 49% or 48%. I think that if one were to put money into these companies and hold it for a year, that you would probably expect to get somewhere around a 30 to 35% annual return, which is far better than what I anticipate the S&P 500 will do. And as always, you know, I'm not a financial advisor, and my personal risk tolerance is definitely different than yours. So I have a little higher tolerance for risk, I guess you could say. I would encourage everybody to not trust any of the authority figures when it comes to what they see on TV, and to always, always, always do your own research, do your own reading, read books like this, read books like this, and definitely if you want to up your investing game, go back and at berkshirehathaway.com reread all of the old chairman's letters from Berkshire Hathaway, maybe over the past 10 years or so. There's a lot of really, really good investment advice in there. All right, so a little bit of wrap up on how you can use the psychology of human misjudgment to get rich in the year 2025 and beyond. All right, thanks for watching. I'm Jeff Whitaker. Until next time.